So there is a existential cloud hanging over, we would argue, all bond and naked fiat currency instruments.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Tim Price. He's director at Price Value Partners and author and host of the State of the Markets podcast. So, Tim, we've had you on before. Welcome back. And how are you?
Thanks very much. Very well, thanks.
That's great. Seeing that you are author and the host of the podcast, the State of the Markets podcast. Maybe we could start with the markets. Where do you see the state of the markets right now and going forward?
It's a good question. I mean, as a business, we're tasked with hopefully preserving and growing wealthy people's capital. In most cases, that's their life savings. And I'd humbly submit that I don't think it's been more difficult than ever. This is a freakish market. I mean, I've been working a little over 30 years in financial markets, and this is as strange an environment as I can remember. It feels, in equity market terms, it feels an awful lot like early 2000, the last sort of hurrah of the first dot-com boom. So the market breadth, or rather lack of it, is quite striking. People, I'm sure you've discussed the likes of the so-called Magnificent Seven, what used to be called the FANGs, the likes of Facebook, Amazon, Apple, Netflix, and Google, and I guess now Nvidia. And so there's basically 6 or 7 stocks keeping the entire US stock market afloat, it seems. And at the same time, I mean, we're value investors. The name value is in the title of the firm. So we're sort of, I suppose, classic Ben Graham investors. Life has been tough for value investors for the last decade or so, as sort of the Nasdaq has crushed all beneath it. So value investing is kind of out of favor at the moment, but it never goes out of favor forever. So we're just banking on mean reversion, I guess. But I mean, I don't think the tone in the equity market is that healthy, to the extent that you've got such a concentrated market, particularly in the States, which has been the big winner over the last few years. Um, as relates to bonds, I mean, we don't touch bonds with a barge pole. I don't think we've owned bonds for clients for well over 2 years now to any meaningful degree. And I think I'm right in saying that when we had that last sell-off, I don't know if it was 22 or 23 now, I lose track of time, but there was a 50-year index-linked, inflation-linked gilt that it must have been 22 because it was between January and I think the October, the end of the short-lived administration of a short-lived prime minister and a economic deputy. Between January and October of that year, that gilt, that so-called risk-free rate bond, that gilt contrived to lose 85% of its value. Now, probably most pension funds in the entire UK will have had some exposure to that instrument. So the fact that you can have a so-called low-risk debt instrument lose almost 100% of its value in the space of 10 months says something is not all right in the fixed income markets.
Yes, and recently we've seen the fixed income market rebound. And I'm of the opinion that this is just like a correction and that we're now in the bear market in bonds. Is that how you see it?
That would chime with sort of our assessment of the world. So certainly, yeah, the strength of the rally has been somewhat striking, but I think people are missing the bigger picture to the extent that, I mean, whenever we present to clients, especially institutional clients, people that hold units in our fund, for example, our equity fund, we typically start off with a long-term chart of interest rates. And it's not just interest rates going back, say, 40 years. It's interest rates going back. These are the Bank of England's figures. They're interest rates going back like 5,000 years, the entire history of recorded time, where you're looking at like grain price or something to like, 3000 BC. And basically, it doesn't really matter whether you take the ultra long view or even the relatively short view. The bottom line is that the interest rate bull run that began in the early 80s is over. It ended 2 to 3 years ago. And I'm not a dedicated chartist or a technical analyst, but I think any technical analyst would say that the long-term trend's been conclusively broken. So it's very difficult to get particularly excited about bonds where they are now. And so from a sort of price perspective or a valuation perspective, they look, I would say, unhealthy. I don't think they're priced correctly. I don't trust the government inflation data anyway. And I think the whole market has has an element of being a sort of Potemkin market. Try and find a market that isn't rigged these days, one way or another. But the bigger picture is it's not just the price trend or the valuation argument. There's a there's a subtler and more pervasive reason to be cautious, and it's that you only have to look at the debt burden of the US, which is whatever it is, $34 trillion, or any other major Western economy. We're all bankrupt. These countries are all effectively uh, bankrupt sovereigns, and so at a certain point, the government or governments are going to want to raise money, and the bond market's going to say, you know what, we're not playing anymore. So there is a existential cloud hanging over, we would argue, all bond and naked fiat currency instruments, which is if and when there is some kind of reset, and there's resets all the time. So monetary systems change all the time. The last time, it happened in a big way, I guess in the UK, was when we were, sort of somewhat late in the day, kicked out of the ERM in '92, which was more or less at the start of my career. And then, of course, we failed to participate in the great Eurozone project, which is probably the best thing that's ever happened to this country. But for the rest of the EU, it happened in 99, 2000 with the introduction of the euro. And of course, for the dollar, we had a big move in 71, which was Nixon taking the dollar off gold. So monetary systems change all the time. But this one really does feel like it's about, it's long in the tooth. I think the average age of a monetary system is something like 30 years. This one's already 50. And boy, can you sense that things are starting to sort of creak at the seams.
Yes, and maybe we can segue now into the economy, not just in the UK, but in the US, now that we've set the tone about what we think of interest rates.
So, just anecdotally, I mean, I've been coming into work in London for the last. I mean, I live and work in London, so London is my home and my corporate home too. Lockdown was just beyond bizarre, but I would suggest that the London commercial and property economy never bounced back from that. So it feels like things are kind of on life support at the moment. Um, give you an example. We're a small firm. We have a total of 5 staff, and everything that we can outsource, we do. So we just do fund management, all the heavy lifting and sort of middle back office stuff we outsource to specialists. But we recently put an ad for basically entry level associate to join us. I think we had over 300 applications. Now that's 300 applications for one, entry level job. And and they say we're not a big or a high profile firm, but people are scrambling to try and get into the business. And I read of sort of, banking, sector, fund management sector layoffs. And there's a number of high profile firms that are basically divesting themselves of staff. Where's the growth? I'm just not seeing it.
Yeah, and it seems to me that every time we've had a crisis in the last, well, 30 years or more, they've pumped more money into the system, which is basically debt in our fiat currency system. And we're coming to a point where the debt is so big that it's killing off the private sector, coupled with the fact that governments are taxing the private sector so much here in the UK. The tax burden is the biggest it's been since, I don't know, 70 years or so.
I mean, possibly forever, but I mean, I think any objective observer would have to agree that the big state is well and truly back, and so there's an element of crowding out at a capital level. But fundamentally, I mean, I make no bones of being a sort of libertarian in terms of economic thought, and as I think Milton Friedman said, if the U.S. federal government was in charge of the Sahara, pretty soon there'd be a shortage of sand. So government is such a poor capital allocator. You only have to look at the HS2, the disaster, the rolling disaster of the HS2 project as an example. The state should be as small as humanly possible. So for the state now to be as metastasized and as huge as it is, it's just fundamentally not a good sign. Um, and I think an insufficient number of people are aware of how bad a warning signal it is when government is as big as it is right now in the UK, but it's big everywhere.
Yeah, that's right. And I can't really see how, I mean, eventually the UK economy will pick up and things will get better. But from what I observe about the two political parties and the mentality, even of a lot of people, a lot of the public. I can't see them wanting less government. Most people want the government to do something. What do you think will take to change people's perception that government don't have any money and that we have to do things ourselves and that we can't depend on government, that if they help you, they have to take money from someone else. What do you think what will it take, you think?
I mean, it's a good question. I wrote in a commentary recently that things probably seemed comparably dire to the current situation back in the 70s. So I was born in 69, so I can sort of dimly remember it from the perspective of a child what things were like in the sort of winter of discontent, sort of 78, 79 period. But by 76, we were already going cap in hand to the IMF. And we had the 3 day week, and we had power crisis, oil crisis, oil inflation, inflation generally, Middle Eastern war. I mean, some of these things sound scarily similar to what we're living through now. But I would imagine that with power crisis in particular, and outages and all the rest, people probably got and rubbish being piling up in the streets and the dead going unburied because the undertakers or the grave diggers went on strike. I imagine things looked pretty poor, pretty dire back then, and then Mrs. Thatcher came along. So I guess the issue today is there may yet be a Mrs. Thatcher or a Mr. Thatcher out there, but we just don't know who they are yet. And because they're not visible, you get the sense of just malaise and drift and all the rest. And hopefully there will be something, because I'd argue that it was Thatcher's arrival on the political scene as prime minister in 79 that turned the ship around, and it was arguably Reagan's arrival on the scene, shortly afterwards. And again, that addressed the sort of the socialist big state drift. But unless and until that happens, it's difficult to know what's going to change, because the problem seems to be not just here in the UK or even in the US, but across the G7. You have you have basically the Perma party. You have, whether you vote in the UK, whether you vote for the Conservatives or you vote for Labour, you're going to get the same policy. So for some malign reason, all of conventional politics seems to sort of squash into the middle, and old historical characteristics no longer seem to apply in politics. So the Conservatives would previously have been a genuinely conservative with a small c group, and now they're introducing the same kind of green woke nonsense that Labour would perfectly happily support. So all of these political parties have completely lost touch with their source code, it seems.
Yes, we have a lot of US viewers as well, so maybe you could touch upon the US economy. Paul Krugman the other day said that the economy in the US is even better than Goldilocks. What do you say to Paul Krugman about that?
I mean, I think, with all respect to Paul Krugman, I think he's fallen off the stupid tree and managed to hit every branch on the way down. To use terms like delusional fantasists, I think would be unfair on delusional fantasists. But then this is the same person that has suggested that a nice short victorious war would be a great way of getting the economy going again. So again, let's put to one side the millions of people that would be slaughtered in that, or the fact that maybe an alien invasion would also be good for GDP. So I mean, this is just palpably absurd. I mean, we don't track the US exclusively. We do buy some US stocks, but again, we don't really sort of monitor the economic situation that closely. But again, everything feels tired. Everything just feels very, very tired. And I don't dispute that the US has been the best place to be invested by miles for probably a decade now. And that maybe that I don't think that'll necessarily change. But the thing that does concern me is the absolute overvaluation of most tech stocks. And again, that's why I think the closest analogy I can make from a personal experience is this feels a lot like the Q1 of 2000, shortly before everything went, well, everything tech then went south. So it's not just that there's massive concentration in this handful of tech stocks, but it's also that the amount of short interest has now collapsed because it's been so expensive to bet against them. And there are some amazing statistics. I think I'm right in saying that if you take, I mean, we have a lot of exposure to precious metals and to mining and commodities, what we call real asset type investments, because we're very concerned about inflation, very concerned about the fiat outlook, very concerned about sort of monetary reset type stuff. So we basically want some sort of hard asset insurance, which has also been volatile in the case of the mining sector. But I think I'm right in saying that the market cap of, I think it's Microsoft and Apple, is 70 times the entire market cap of all commodities companies. So you've got some quite incredible, let's say, valuation distortions. And so we're not a hedge fund, so we're not going to short anything. We may have exposure to trend following funds that will do some short sales, but we don't do it ourselves. Um, but I don't think the likes of Apple and Microsoft have ever been more egregiously overpriced.
Yeah, I saw something the other day that said that I I think the market cap of Microsoft is the same as the UK GDP, and that makes me think of Japan in the 80s, late 80s, early 90s, when just started in the business, and a year or two before you did. That at that time the value of the Imperial Palace property in Tokyo was more than the whole value of the of all real estate in California. It just seems a little bit like that to me.
And as I've said on multiple places in the recent past, the Japanese experience is fascinating. I mean, I've got a lot of time for the Japanese. I visited the country briefly once or twice in the 80s, and then worked with the Japanese in London at the start of my career. Worked for some Japanese banks, and I'll give the Japanese credit for one thing in particular. They are stoic. So by all accounts, the amount of wealth that was lost in Japan after their own 80s bubble burst, both in the property sector and in the stock listed equity sector, and there's a market value, the loss of value equated to not one but two American Great Depressions. So they had like basically two 1930s, one after the other. But throughout all of that, I don't think Japanese GDP was much affected. I don't think Japanese unemployment was much affected. Social cohesion was not much affected. And you think, if that kind of loss of wealth was suddenly to become manifest, say, in the US, I don't think US cities would be quite as peaceable and peaceful as, say, the likes of Tokyo was during that experience. So, say one thing for the Japanese, but that they're not stupid, and also they're so very, very culturally, stoically minded, and they suffered. And yeah, I think people have short memories because people say, well, that could never happen again. But let's take, say, the US experience after the crash. I think in terms of the Dow Jones Industrial Average, that Dow did not regain its 29 peak until 1954. So people will be shocked as to how bad and underperforming markets can be after they hit extreme valuation levels and then burst.
Yeah, and it looks like the Nikkei is now getting back to that 1989, 1990 high.
Which, I mean,
So
it's taken long enough.
yeah, 34 years, which is similar to what happened in the US after the 29 crash, isn't it? So is it possible?
Well, the other thing that's fascinating about Japan is that it now looks as if Japan is, let's say, back in the game, if nothing else. So it's finally made up for so much lost time, and its equity market's an awful lot healthier. And of course, some Japanese businesses are truly world class, so there's no reason why Japan Inc. shouldn't do tolerably well. But the really interesting thing is that Japan now seems to have passed on its sort of like 1980s but bust pattern to China. So China now seems to be the big economy that's really on the ropes. The stock market's in free fall. I noticed that the government seems to be trying to implement bans on short selling, all the time tested nonsense ways of dealing with free markets. And there's a sort of sense, there's a sort of palpable sense in the air that China now gets old before it ever gets rich. China's demographics are just a disaster, and now that they haven't got enough young people coming up through the ranks, so China really looks like a mess.
Yeah, I think today as we speak, I think Hong Kong,
Evergrande, I think, is filing for, or has been made to file for bankruptcy.
yeah, in by a Hong Kong court. So that's really interesting. And talking about China, maybe we could move into geopolitics. and then also into the bigger picture. So, how do you look at the BRICS versus the West? Do you think the BRICS are the new kids in town, or do you think there's still a hope for the West, or is the West? I don't want to say the word. That's what Hank Paulson said during the '08 crisis when he was Treasury Secretary. He said the West is effed. What's your view on that?
I mean, it does feel like we're living through a sort of an epochal change in the passing of the baton, if you like. So it's abundantly clear to me, and I'm sure to many people, that the economic baton is being passed slowly, or maybe not so slowly, from the US and from Europe towards Asia, whether that's China or just the sort of ASEAN economy more generally, Southeast Asia as well. Their fundamentals fundamentally, not necessarily including China, but certainly Asia is obviously it's a huge block. Is going to be the place to be for growth, I think, for the foreseeable future. That overall, you're talking about a young population that are hungry in every sense of the sort of the word. So they want to go, they want to make money, they want to get firstly a motorbike, and when they get a motorbike, they're going to want to get a car, and when they get a car, they want to get a house. And so you've got an enormous untapped potential of very, very hardworking people that are determined to raise themselves out of poverty. And at the same time, you've then got the likes of the BRICS themselves: Brazil, Russia, India, China, South Africa, many of which are resource-rich countries. And they're probably fed up of having to deal with this, absurd petrodollar system that everyone's been dealing with for 40, 50 years. Um, a friend of mine made a very interesting point fairly soon after the Ukraine war kicked off. And the point was as follows: that even at the height of the Second World War, the BIS, the Bank for International Settlements, the so-called central bank, the BIS, even at the height of the Second World War, always respected the sanctity of German foreign reserves overseas. And yet, a couple of weeks into a shooting war in Eastern Europe, the Biden administration steals Russia's overseas reserves. That policy may yet turn out to be the most misguided and counterproductive economic policy in the history of the United States, in the modern history of the United States, because what it's done is drive Russia even closer into orbit around China, so unifying that kind of BRICS axis, if you like. And it's also led to all non-aligned third-party countries sort of scratching their head, looking at their own reserves and saying, you know what, I don't want to play this petrodollar game anymore. So there's undoubtedly huge movement in the sort of tectonic plates of geopolitics. And again, the biggest concern we've got is just is at a currency level, at a credit level, at a debt level, that the mess the US has got in itself into, I don't think is resolvable or soluble in any traditional way. If you accept the argument that the US is now so head over heels in debt that it's basically almost an existential issue, then there's only three ways you can attempt to address that. One is that government engineers enough economic growth to service the debt, which I think is impossible. The second option is that the government basically defaults, or we could use a more polite term like restructuring or whatever, a debt jubilee. But still, I think the pertinent, most likely, and most plausible outcome is that they just inflate the debt away. And so this is why I keep citing people like the great classical economist Ludwig von Mises when he said, inflation is not something that comes out of a clear blue sky. It's not something that comes like the plague. Inflation is a policy. So none of the inflation that we've seen around the world over the last few years has come around by accident. It's come about because of lockdown, the insanity of lockdown, followed by the insanity of money printing at the end of a debt super cycle anyway.
Yes, interesting that you spoke about Asians, young people in Asia and other places in the what's now called like the global South being hungry, that they want to buy a motorbike and then eventually buy a car and a house. While here in the West, the World Economic Forum, which is probably an institution that you don't see very well either, they're telling us that we need to own nothing, that we shouldn't drive cars, that even motorbikes, and we've seen here in London as well, there's trying to stop people from driving with the ULEZ. Yeah, could we touch upon the World Economic Forum and whether these people really have so much influence and power, and whether they're starting to lose it right now? Are people waking up to them?
It's a really good question, and it may be wishful thinking on my part, but I genuinely do think that people are waking up to this stuff. So I was caught by, I think it happened shortly after Javier Milei, the new Argentinian president, spoke at the Davos 2024. But either way, it was pretty much contemporary with that. The FT ran an article, a leader article, on their letters page, questioning whether the West's day has come, basically, whether it's had its day, I should say, whether it's still it's still relevant. And given that the FT, the Financial Times, has been a real cheerleader for sort of World Economic Forum type philosophy and policy, I thought that was an interesting potential change. And it's like, it's admittedly only straws in the wind, but it just gave me a sense that the the Great Reset is not as robust and uniform and unanimous as it once was. It's not a, it's not a. There's tension in the ranks, let's say.
Yeah, I mean, there's a lot of countries that are kind of yeah, ignoring the World Economic Forum. My hope is that politicians will be ostracized for going there, and also maybe big business. So I wanted to ask you to, as we wrap up here, what can individuals, do, not just like wealthy investors, but the general public, people that are trying to start up, young people or people that haven't been able to save. What can they do to navigate? What can they do to navigate in these what you might call interesting times? And I think you mentioned in one of your recent interviews about things being more like biblical.
Mm. Yeah, I mean, it's interesting that you touch on that, because it's something I've been thinking about increasingly over the last few years, really since COVID began, which is I genuinely think we are living through something akin to what you might call apocalypse, or possibly revelation. So I was struck a few years ago when I heard, I think on one of the marches, the protest lockdown protest marches in London, that the origin for the word apocalypse is actually an ancient Greek word meaning revealing or unmasking. And it certainly does seem to me that what's now happening at an increasingly global level is that people are waking up, people are beginning to appreciate, they're beginning to see behind the mask, the facade of, whether it's growth or whether it's, the new world order or whatever you want to call it, and they don't like what they're seeing. And so there's a book that I could sort of bore for England on the topic of, which is a book called 180 Degrees by a gentleman called Fergus O'Connor Greenwood, which is a pseudonymous title. I don't know what his real name is, but 180 Degrees. The subtitle is "Unlearn the Lies You've Been Taught to Believe." And I came across this book, I think, last summer, and sort of binge read it over a weekend. And it's about 800 pages. It's an extraordinary piece of research. What it strongly suggests is, as I've sort of indicated, is that they've been lying to us for pretty much ever about pretty much everything. So there's a lot of things in our not just ancient but recent past that are simply not true. And I think people are waking up to that fact now.
Yeah, and you're probably aware of the book The
The
Great.
Great Taking.
Yeah. How, I mean, for your business, that's a bit worrying. So,
Sure.
uh,
Well, you asked you asked how people should behave,
yeah,
how they should respond to this stuff. So
yeah,
going back to that sort of, if you like, the point about religion or spirituality, I think
yeah.
that my first bit of advice to anybody would be keep the faith. And if you don't have faith in something, then find it, because I think we're going to need to find some form of whatever you want to call it, belief in something that's going to take us through. It's difficult to believe that the worst is past. I think the worst may be yet to come, and there now seems to be some appalling drive to start talking about the next war with Russia, which has come out of absolutely nowhere. I don't know where this nonsense narrative is coming from, but so I would encourage anybody to find some faith in in some form of thing worth believing in. In investment terms, or in cultural terms, I think the issue is to we would certainly suggest, avoid debt related exposure. So avoid anything that gives you exposure to naked fiat currency, for example, because if there is going to be some kind of reset, you don't want to be on the wrong side of that reset. So we would certainly recommend the real over the let's say the artificial promises of politicians, let's say. um, do things, if you can, at a local level. Use cash. Not, I'm not saying cash is a great asset, but use cash, because the last thing we want to do is sacrifice physical cash in the form of having to use something like CBDC, and trade locally and do stuff as locally as possible, ideally without big corporations.
Yeah, I agree. And yes, what you said there about faith and believing in something is true. I mean, when and I think I go back also to 2020 and the fact that they locked us up for 240 days here in the UK. Uh, that was something that gave people a lot of time to think, and fortunately hopefully it will like come back to haunt them. So Tim, thank you very much for your time, and hopefully we'll talk again soon.
An absolute pleasure. Thanks for having me, Mario.
You're welcome.